Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're having a wonderful weekend so far. So, as always, we're going to go over the numbers out of China, out of Europe. We have some things with regards to robo-taxis as well. And then let's focus a little bit on the Tesla stock story. So first up, let's start with the Tesla weekly insured number. That number came in at 6,900, which is less than the 10,800 we got in the same week last year. But don't forget, we're getting a big impact because of that Model Y refresh that is happening right now. I fully expect this number to be a bit bigger next week as we are starting to see more and more new Model Ys being delivered. And so right now, Q1, we are at 57,300, which is around 12% less than where we were same week last year. Of course, channel members have access to this sheet already on a weekly basis. If you don't want to be a channel member, that's fine as well. You just have to watch the weekly videos. Also, if you're new here, hit that subscribe button. We really appreciate that. We're trying to reach 90,000 subscribers. Then, of course, we're going to make that push for 100,000. So, first of all, thank you very much for all the support that you've been giving me since the start of this year and, well, the OGs since the start of the channel. I really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first up, let's look at the monthly returns for Tesla stock in the past 10 plus years or so. I mean, to be honest, when you look at this looks like the board game Snakes and Ladders, right? You go up with the ladder, then you go down with the snake. Now, for the month of February, we're actually down 23%. The month of January, to be honest, I don't know how they got this number, 0.19%, but all in all, year to date, we're down 22% at the time of making this video. But as you can see, Tesla has been an extremely volatile stock on a month-to-month basis. But if you look at the total each and every year, we had way more green years than red ones. Of course, we had a huge red year here back in 2022, just like with any other big tech companies. Huge bear market, so we're down 65%, which basically deletes quite a lot of returns from before. But all the rest, I mean, we've had horrible months before, right? We've had here in 2020, of course, that COVID crash, down 21.5%. Back in 2018, down 22.4%. In May 2019, down 22% as well. And yet we finished the year up. Now, so this time, by the way, here, January 2024, same thing. We started the year horribly, down 24.6%. And yet we ended the year up 62.52%. Of course, we had a tremendous end of the year, right? The stock basically doubled since the election. Of course, now we're down a little bit. So here, of course, in 2025, we're also starting quite weak, but we've got, well, 10 more months to go for the year. And I think things could change quite drastically with regards to sentiment around the stock. And I'll explain why towards the end of the video. So the weekly insured numbers on a year-over-year basis, you can see from 22, 23, 24, 25, from Piloli on X. Like I said, we're down 11.9% year over year. But of course, we have a Model Y refresh, and Model Y, unlike Model 3, is having a much bigger impact to the Tesla story, which you can see right here. When we had a Model 3 refresh, when we're having a Model Y refresh, you can see that Model Y deliveries come down quite drastically, but we are reaching a point, we're going to reach a point that Model Y refresh is going to impact our deliveries sooner than what a Model 3 refresh did, which is probably why we should expect to see way more Model Ys next week. As you can see, we've barely had any Model Y sales in the last week. Model 3 has actually been doing quite well in the last 2 weeks. And so while it's true that right now it doesn't look like Q1 is going to be a good quarter, far from it, still have a month left. And I do think that in that month we're going to have a positive impact from the Model Y, especially in China. But believe it or not, I think in Europe we could see a push there as well for the week for these select European countries: UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland. The number came in at 2,400, a bit more than the 2,200 and the 2,000 that we've had in the last 2 weeks. But of course, still down compared to the same quarter last year. But here as well, I do think that the Model Y is having a negative impact on those figures. Plus these countries make up around 60% of the overall sales in Europe. So there's no France or Germany or the other countries, basically the other 40% here. So you have to know all of those facts. We usually get those monthly data points towards, well, the end of the month. So for Germany and France, I'm probably going to cover that next week or so. And so right now, yeah, you've probably already seen the numbers and the headlines, but right now, just looking at those 60% of sales in Europe, sales are down, the numbers are down 22.5% year over year. I believe in January overall, we're down, what was it, 39 or 49% or so. So yeah, definitely there is a lot of weakness in Europe, weakness in the car market, weakness in EVs, and also weakness because of, well, political sentiment. Now, going back to the United States, in the United States, well, Tesla actually got some awards. So here, if we look at manufacturer and make loyalty awards, we have here overall loyalty to manufacturer, GM wins again. Overall loyalty to make, Tesla wins again. This is the asterisk, which means they won this award already in 2023. Overall loyalty to model, Lincoln Corsair. Then we've got here ethnic market loyalty to make, also Tesla wins there. And then Tesla won another one here, highest conquest percentage. So I guess they're still doing okay, right? They're still doing okay, all things considered. And then the last thing here is sentiment versus stock price. As you know, when we were above $400, I took some profits. I've made it very clear that I didn't think it made any sense for Tesla to be trading at $1.2 trillion at over $400 per share. The earnings report wasn't really that good, so the reaction didn't make much sense, but probably it just had more and more momentum from the post-election extra bull market that we were having, and now we went under $300, which makes a little bit more sense. I'm yet to add more to my position, but maybe that might change pretty soon, because if you needed a small reminder of what might happen just in 2025, first of all, launch of affordable model, right? I'm not saying models, I'm saying model because I want to keep my expectation low or realistic here, right? I am not expecting more affordable models. We also don't know what that's going to be. Is that just going to be a Model 3, Model Y with less options and specs and things like that, and that's how they're going to drive the price down? Or is it going to be that Cybercab car with a steering wheel? That would be quite something. That would be very, very interesting because I like the look of that car. If they can make that available and they can make it on a, well, huge scale, which probably that's the plan, I think 10,000 units per week or something like that, then suddenly we're going to have, well, lots of revisions on the upside, especially when it comes to production and delivery figures. Should be launched towards mid-2025. So yes, they have a couple of months left, but usually we do get some, well, leaks here and there. So far, nothing other than that Cybercab with a steering wheel, which of course raises the question, is that the one that's going to be released? Or is it going to be a Model Y, Model 3 stripped down to bring the cost down? What do you think? Let me know down in the comment section below. Then another catalyst is of course the Model Y refresh. I mean, the best selling car on the planet, well, officially in 2023. I'm still waiting for the official figures for 2024, but Model Y, huge impact. So when you have a refresh, of course, sales are slowing down, but should then reaccelerate when they're ramping up that production. So this again will have a positive impact on Q2 figures. Then we have FSD in China. You've probably seen already all the discourse and all the videos that are going around if you're in China, so their Chinese well, their TikTok version, Douyin or something like that. Then we have possible launches in June, right? Already in Austin, and then in California as well, where they have applied to get the same license that Waymo has. We also have towards the end of the year, Tesla Semi, which in my opinion is going to be a huge product for Tesla. Still going under the radar, and I mean, I get it. It's been delays after delays. But once this Tesla Semi really starts to go into production and they're ramping that product up, I think that's going to have a huge impact on Tesla's business. Of course, another part of a huge impact to Tesla's business is Shanghai Megapack factory. We know that the energy side of the business is growing much quicker than the other side of the business. So this will definitely help, well, the overall revenue of the business and gross profit as well. Of course, rate cuts. We expect, well, the market still expects only 2 rate cuts this year. I think we might even get 3, maybe 4. That definitely will help Tesla, but the overall automotive market, the overall real estate market as well, builders, that could definitely help that. And then we have a negative impact, which is still going to be Elon's political games, which whether you like it or not, is a negative aspect to this whole thing. Now, of course, today, when you look at what has happened in the last 2 years, I mean, what we can see is automotive sales revenue is actually down 7.8% since 2 years ago. What we can also see is that energy generation and storage segment revenue is up 133.6% since. Services and other revenue is up 67.4%. So yeah, the biggest chunk of the revenue, which is still, yes, believe it or not, making and selling cars, growth there has decelerated, but the other segments have accelerated. Same thing with gross profit. Gross profit for the automotive segment is down 50% in the last 2 years. But energy is up 385% and is becoming a bigger and bigger chunk of the overall gross profit pie. And the same could be said here with services, that's up close to 24% since. But yes, believe it or not, the business right now, whether you like it or not, doesn't matter. But the business right now still, majority of revenue comes from selling cars. Majority of gross profit also comes from selling cars. Now, yes, the energy side is growing much faster than that, and so it will have a better impact, or it should reduce the negative impact from, well, the automotive side that is struggling. Now, of course, this does not take into consideration the positive impact of, well, a robotaxi network, Optimus, Tesla Semi, etc., etc. That is true. But when we're looking at what's been happening in the past 2 years, you have to face reality here. And I'm sure we're all long-term investors, especially if you invest in Tesla. You have to be a long-term investor because otherwise, what's the point? But I don't want anybody to tell me that, oh, but in 2040 or in 2050, we might have XYZ. Let's be honest here. Nobody cares about 2050, right? Let's be realistic. We don't know what's going to happen 1 year from now, 2-3 years from now, 5-10 years. So starting to try and make sense of, oh, the price today bakes in 2040 revenue. Let's be honest here and let's start being a bit more realistic, shall we? And the last thing here is Waymo. So Waymo announced that they've reached 200,000 pay rides per week, which is, well, quite a milestone because 7 months ago, they were at 50,000. 4 months ago, they were at 100,000. 2 months ago at 150. 3 weeks ago at 175, and now at 200,000. So yeah, I guess they can scale and do better. Now, last thing here is looking at the stock right now. We did close the week under the 200-day moving average, which is quite interesting because it does seem like we might have found support where we previously had resistance back here in July of 2023. RSI, of course, is now, well, much better than before, previously here above $425. RSI was overbought, but not that much as previously, which of course led to this downturn here. Now, again, the price today is much better than the price before to reflect the reality of the business right now. But as I've shown you at the start of this video, Tesla is a volatile stock. We've seen what has happened in the past. Stock can go up 20% in a month, can go down 20%, can be flat. It can be extremely volatile, but as you've seen the last 10 plus years or so, if you look at the year performance, more green than red. Of course, now we have reached a different state of Tesla. We've reached a different Elon Musk as well. So yeah, you have to take all of that into consideration. But now the stock price makes a little bit more sense than previously. Yes, of course, Q1 numbers might probably not be as rosy as you might have thought. Or let's be honest, I don't think anybody thought that Q1 is going to be that great. But as we get into Q2, mid-2025, more and more of those catalysts, if you want to call that catalysts, are going to be, well, included in the performance, included in what the business actually reflects today, which to me is much more exciting than just talking about what might or might not happen 5, 10, 15 years from now. Because yes, I do think that affordable models are going to definitely help the business. I've said it in the past. I think that if they skip the affordable model and go straight to robotaxi, I think that's going to be a bad business move. So quite happy that they're moving in the right direction. Megapack factory in Shanghai ramping up quickly. That's great. Tesla Semi at the end of the year, great as well. Autonomous vehicle pilot programs in China, in Austin, in California might help with sentiment, that's for sure. And then, yeah, the negative impacts are still going to be Elon Musk politics. There's no way around that. So all in all, that's about it. Let me know what you think down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye bye.